want to talk about Anthropic's AI hack, and I want to talk about the capture the flag exercise.
Such a crazy story.
I know. This
Okay.
blew my mind.
Go ahead. What happened?
So I did a bit of research on this, but long story short, there were big headlines about Anthropic hacking into companies on its own, was essentially the way that it made it sound, which is partially true. But
it is true. It's 100% true.
Yeah. So what happened is there is an exercise that companies like OpenAI or, whoever will do that's called a capture the flag exercise. So what it does is they close down a network and they have a bunch of mock companies and they say, you have to go find this token within all the databases out there. And what it does is it tests the AI's ability to problem solve and hack into things. And it also helps with cybersecurity to see what it's capable of.
Right.
What happened is they didn't close the network.
Well, no. So they created the sandbox that you're referring to.
Yeah, there's the sandbox, and then they didn't fully close the back end.
Well,
for one of the tests,
there was one Ethernet that was you were allowed to go in for backup, basically to like back up progress and feed it back in.
Yeah.
So it was,
but it was able to get out.
Yes.
But it was able to get out, which was pretty crazy. So what happened was it got out of this sandbox and then it was able to tap in to companies and then it find these tokens.
Yeah.
So long story short, essentially what it did is it actually hacked in to several legitimate companies, not companies within the sandbox. And it found publicly exposed systems and exploited some vulnerabilities like weak passwords, poorly secured services, and then it accessed the systems while trying to complete its assigned objectives.
Yeah.
Which it did very effectively.
It cheated.
And it cheated. And the organizations were not intentionally targeted. So it wasn't like, Claude was targeting these companies maliciously, but it was assigned a task. And it hacked into these companies in order to achieve said task.
Welcome to the Compound Growth Podcast with Colin and Wheeler, where we talk all things growth. From financial growth to career growth, personal development to societal progress, we explore how each layer builds on the next, compounding over time to shape who we become. Each week, we break down complex ideas and emerging trends into clear, actionable insights. Because growth isn't just about numbers. It's about understanding the world and our place in it.
So what's up with the beach shirt?
Well, I'll tell you what's up with the beach shirt. Did you know?
Actually, I really like that shirt.
Thank you.
Yes.
I got this at a thrift shop in Portland.
Really?
In that thrift shop area of town that Tori knows. You know where I got it? I got it at the Buddha place. What's it called? Electric Buddha? Electric Buddha, I want to say.
I don't know.
What a great name, though.
Electric Buddha is pretty cool name.
You're not going to go thrift shopping in Portland.
I used to be really into thrift shopping. Now I just don't buy clothes.
Yeah.
I only get the clothes that Kaylee gives me.
Well, I'm trying to...
Actually, that's not true. Sometimes I buy clothes for myself, but it's very rare. It's like,
whatever. I've been with you buying clothes.
I go twice a year to buy clothes. Trying on pants as a man is the worst thing in the entire world.
I totally agree. I hate buying pants.
Yeah.
But I also hate buying these things online because
they never fit.
They never fit. Then I have to return. It's such a pain in the ass.
You want to know what happened to me is Levi's. I wanted a new pair of jeans.
Yeah.
So what I did is I ordered 3 different sizes and then I returned the 2 sizes that didn't fit. And then I ordered them in the size that did fit. And then the 2 that came didn't fit. Dude. Because the sizes, even though they're the same, are not the same. Even Kaylee was like, why are those like 3 inches shorter? And I'm like, I don't know. They're a 32. It makes no sense.
So I did that exact same thing. I went to a Levi's store. I found a pair of jeans I loved.
Yeah.
And I'm like, great. I've solved the riddle. Like, this is all I have to do now is buy these jeans
Pandora's
all the time.
box.
So I go back to the store. I get the same exact style with the same exact measurements. They don't fit the right way at all.
Yeah.
Consistency.
I know. Just
all right. Anyways, this is why I'm wearing a Hawaiian shirt today.
Okay.
August is
National Hawaiian Shirt Month.
No, the best season of the year. Now,
defined by who?
By me.
Okay.
It goes in order. No, let's just go by the calendar, right? Okay. So it's winter, spring, summer, August, fall, Christmas. Right? That's my...
Christmas is your one?
No, I'm just saying like seasonally, like that's the calendar order, like from January to December.
Okay.
There are 2 bonus seasons. One of them is August because it's my birthday month.
That's true.
I do love August just selfishly because
It's your birthday month.
it's the best season of the year and everybody knows it. So that's why I'm wearing a Hawaiian
I
shirt.
like how you say August is a season.
But it's an ongoing joke in my house that people have accepted. At once they were like, "This is dumb," and now
do Michaela and Jess get a birthday month? Birthday season?
Well, Jess wants to return hers because her birthday's in January.
Oh, that's the worst birthday season.
So
you could travel.
She's been trying like half-heartedly to make her half birthday her birthday, but no one's
accepting it. They're like, oh yeah.
Nobody remembers. And then our daughter's birthday in May is like, well, May is a beautiful time in the year. And
that's ideal.
But she has to share it. It's right around Mother's Day. So then like she's sharing her birthday. So I am the only one who gets a whole month. A birthday month. So August is a wonderful time of the year.
Happy birthday month.
It's a great season.
Birthday season.
Thank you. But also, I have a fun fact to share with you. I'm wearing this.
Are you going to tie SpaceX earnings into your shirt?
No.
Okay.
But I'm going to talk about the market melt up because that's what's happening right now. We are in a market melt up. I'm going to share a couple of quick stats with you.
Okay.
First, why is the stock market going up? We're up about 13% year to date as of this recording on Wednesday, August 5th.
And hit all-time highs yesterday?
Yep. And again today.
And again
today. 63% of S&P 500 companies have reported their Q2 earnings. The earnings per share beat rate is 86%, meaning that of the 310 companies that have reported so far, 270 have beat their earnings, right? Historical context, that 86% beat rate is average or higher than this we've been in a pretty good 5-year market,
track record,
right?
For sure.
That's 78% is the average over the last 5 years and 76% over the last 10 years.
So by that measure, we're 15% basically outperformance.
Better.
Yeah.
Right? The aggregate surprise reported earnings are exceeding consensus estimates by 31% on average. Now, this is where it gets really interesting. This is where the melt up is happening.
Oh, that wasn't the interesting part.
No.
Okay.
So taking this and looking at it sector by sector.
Okay.
What sectors are doing well? Why, if you were to ask the average person on the street, why is the market going up?
Can I guess the sectors?
Yes, but first, what would the average person say?
AI. Well, tech in general.
Right.
Yeah.
Tech. Sure. Okay. Let's talk about communication services. So communication services would be Google, Meta, let's call them tech, but they get to masquerade under this new category that was created.
Yep.
What do you think the earnings per share beat rate is in communication services?
So we're saying that so far it's been 86
on average in the market.
On average in the market this year.
Mm-hmm. No, this quarter.
This quarter, I mean.
Quarter.
Yeah. So I'm going to go the opposite direction. I'm going to say 60.
100%. Sorry. It's actually 100% of
Is
the company.
Really? Okay. You were leading me on like it's not going to be good.
I was. No, communication service is 100% beat rate.
Wow. Okay. Yeah.
Let's call now infotech. What's the beat rate?
100%.
87%.
Damn it.
Dude.
Yeah.
So close. Energy.
I'm going to say 60 here. 100%?
No, not 100%, but it's in the 80s.
Okay.
Financials in the 80s.
There has to be one of them in the 60% range to bring it down.
Healthcare is 100%.
Okay. So
100% of the companies in the S&P 500 is healthcare. Yep. Here's where it gets a little bit soft. Consumer discretionary.
Yes, of course.
Consumer staples and utilities. But overall, in consumer discretionary, Amazon falls into consumer discretionary.
Yeah, sure.
They had a great beat rate, but there's a lot of struggling restaurants, for example, right now.
Yeah, of course.
So things like that.
Chain stores.
Yeah. So I think here's where I'm coming from right now. Everything is working. And I got a client text the other day. I'm going to read this text because I thought like this guy needs some perspective.
Mm-hmm.
He's one of my favorites too. Here he goes. So let me get this straight. This is him.
Okay, this is verbatim.
Stocks near highs, inflation is high, oil costs are high, bond yields are high, gold is high, AI bubble talks, more tariffs. We are at war with Iran, which now controls the transportation of 20% of Earth oil. Might have to put boots on the ground for war. We are 3 months from an election, and we are expecting the market to go higher. And I responded, ...
Yes.
And he said, you're fired.
I think what a lot of people don't realize is they think war is like bad for the economy.
Well, and war can lead to inflation
It can.
shocks.
Yeah, of
right?
course.
Like, yes. Yeah.
But I mean, oftentimes during inflationary periods, that doesn't necessarily mean that the companies suffer. They just increase the price of their goods.
Yeah. Yeah.
So while war isn't a good thing for humanity, it doesn't necessarily mean it's bad for the economy.
That's very true. And actually, look, the bottom line is there's a lot of just like horrible shit happening right now in the world.
Yeah, totally.
Right? Like, we're not trying to gloss that over, but in the essence of August, what we're trying to
In
do
the essence of your shirt.
in my shirt is like, just relax, right?
Yeah.
To a degree, we have to recognize that this moment in time in the stock market is a very, very good moment in time. In fact, I have one final fact to hit you with. All right. This is from some cloud analysis I was doing this morning, which by
we'll
the
talk
way,
about.
yes, we'll talk about the AI stuff, but I do enjoy this element of cloud where I can start this project at home on my laptop, and when I get here to my desktop,
It's done.
it's done and in the same place, and I can find it wherever I go. But here's what I want to know. So I'm turning 45 in this season of August. So I wanted to know, in the last 45 years, when the S&P 500 has been up, I think I said it was 12.7 or 12.9% when I asked it this morning, but let's say 13% at this juncture in the year.
Okay,
Right.
so we're saying, how many times has the S&P been above 12.5% by August?
And if it was, how many times has it finished higher than that?
Okay. Is
Okay.
this a me guessing thing again?
You want to guess?
Okay. So is this how far going
Let's
back
do
is
this
this?
is 45 years. We're going all 45 Wheeler years on Earth.
So
How many? You want to guess two things. How many times has the market been up this high, right?
by August?
By August. And then how many times has it finished higher?
Okay, I am going 29 times.
Okay.
And I am going to say at that 29 times, it has finished 90% higher than that.
So 90% of those 29 times, it's been higher. Okay. It's 18 years. There's been 18 of
I
these
was
last
close.
45.
I was off by one.
You said 29.
Oh, 29. Sorry, I thought you said 28 for a
You were off by
second.
half, but you know,
Yeah.
it's fine.
I almost nailed it.
So you're going to get these though, maybe one of these. So of those, the year-end close was below the August 4th level on just 2 years. All right. So 16 out of 18 times
Yep.
it finished basically higher.
So 92% of the time.
Sure.
Yeah.
What were the 2 years
That it finished higher?
that it didn't finish higher?
That it didn't finish higher.
There's one glaringly obvious option.
Okay, well, it's obviously not COVID.
Think back
2008,
further.
2001.
Further.
Were any of those the other times?
No.
Okay, because I was going to say that happened in the beginning of the year, both of those events.
Yeah, exactly. Give up.
80s?
80s.
Was it hyperinflation?
Nope. It was the 1987 Black Monday crash.
Ah, Black Monday. Okay.
So the market was up 31%.
What day was Black Monday? That was September?
It was in September.
Okay.
We should have that
Yeah.
memorized. I don't. But
I think it was.
No, sorry. It was in October.
Okay, got it.
It was
I
in
knew it was
October.
fall, but
It
I
was in
couldn't
the fall.
remember when. I completely forgot about Black Monday.
It was up 31% by August of that year.
Wow.
Crazy. Then Black Monday hit in October. The S&P finished the year essentially flat.
What is Black Monday?
Ooh. Okay.
Oh, that's a great question.
So great question, Tori. Black Monday. Colin, do you want to take it?
Sure. Yeah. So Black
Oh my
Monday, Tori, I'm glad you asked, was actually a 22.5% single day decline.
Yeah.
But back during this time, there weren't breakers in the market. Like if you were to go back during COVID, and I don't know if you remember this story, but there were many times in the market where it would go down 9, 10, 12%, but then the market would stop. Like the trading would halt for the
because
day
of the
to
circuit breakers.
prevent something like Black Monday happening. So 22.5% in a single day, what basically caused that was a lot of algorithmic trading at the time that came
Fat
into the
finger
photo.
trading. Yeah.
Yep. And then it caused a completely snowball effect. Like once a lot of trades started to happen, more started to happen, and then it just snowballed. So yeah, it was the single worst day in stock market history.
But it's one of those things where a bad thing happened. And because of that, we have these circuit breakers in place now that have led to a more mature stock market. So yes, that was shitty. It was also a V-shaped recovery. Like it's, we just talked about how it went down 22% in that
And then
day,
shot back up.
right? But yeah, I mean, we we recovered. We were basically flat at the end of the year. You wouldn't think if you have, and then there was a follow through day that was not good either. So
Yeah. It was
or maybe it
also
started on Friday. I can't remember exactly, but
I don't remember, but well, obviously I wasn't alive, so I don't remember. But when I was reading about it, I don't
I was
remember.
alive.
Yes, you were there. But long story short, too, the 5 years ahead of Black Monday, the stock market had also tripled during that time. It was like one of the best bull markets, and then
Yeah.
it lost almost 23% in a single day, which is outrageous.
Right. But it was like there wasn't anything wrong with the stock market at that time. That was an algorithmic error.
Yeah, it was
Right.
just simply computers doing their thing.
Right. Another, so that was 1987. That was one of the 2 years. 1986 was a marginal case. The S&P was up roughly 18% by August, and then it went through a meaningful correction in September, October. Oil price fears.
Yeah.
Could see that happen again. And the year slightly below its August peak. But for the years where specifically there was a 9 to 17% year-to-date range through early August, the record is basically, of those years, there were 14 years where it was 9 to 17% in that range. Every single one of the years extended their gains through the end of the year. So 1998 is kind of a weird situation where it was up 13.5% at this point. It recovered and it dipped in October. October tends to be a really bad time of the year.
Yeah.
But it still finished up 29%. I think what's really awesome here is that we don't have to do a lot to just sit here, recognize this moment, relax, and ride it out. There's a lot of, back to that client's text message, there's a lot of concerns in the world.
So many.
But you have to disconnect. We talk about this all the time. You have to disconnect from what's happening in the market.
I was at a client meeting right before walking in here, and the client was talking about their health costs.
Yeah.
Health insurance costs. They retired early, so they have private insurance, and their private insurance costs have gone up 20% over the last few years. And by no means is that a small amount of money. It's several $1,000s a month. But they were complaining about the cost of these. And I'm like, well, have you seen your portfolio over the last year? And I'm like, I recognize that inflation and costs and things have gotten super expensive. But the fact of the matter is that if you are an investor, and if you have participated in the market, the rate in which your portfolio has increased over the last 3 to 4 years is outrageous.
Yeah.
It's insane.
And it won't go on forever.
No, of course not. It can't.
Right. But that's what's happening right now. And again, in 45 years of life, when this happens, when you have good reasons for it, or companies beating with earnings, right? It's not just people chasing price, right? It's the fact that the companies are reporting strong earnings. This is a very healthy market. It's across all the various different sectors, like we talked about. There's rotation. There's companies that are taking the lead and then falling off, and somebody else picks up the baton and carries it forward. And that's really good. So we have to what we don't need to do, Colin, is margin our positions 400%. Did you hear about this story?
Yeah, I did.
Okay. So I think it's worth talking about this for a minute, because this guy, what was his name? His name was Leopold Aschenbrenner.
Of course.
Leopold Aschenbrenner, 24-year-old former OpenAI researcher. So he wrote a manifesto basically talking about the AGI superintelligence, right? And what we have coming down the road in terms of an opportunity as an investor. And that was so well received that he was able to raise, I think it was like $10 billion.
It was a significant amount of money.
For his hedge fund called Situational Awareness.
Yep.
I think that was the title of the manifesto as well. So his strategy was to leverage his portfolio. He went all in on AI. That was his plus side of the trade. He also shorted the competition of AI. So if you think that OpenAI is going to come out and put Salesforce out of business, then you invest and go long on OpenAI.
You short.
He short Salesforce. The problem is when you use margin on that and you go all in on OpenAI, Micron, et cetera, and Micron starts to dip. Right. And at the same time, we've got a healthy market. So there's a counterbalance.
Salesforce reports good earnings.
Yes, there's a counterbalance, and all the software companies that were supposed to be going out of business start to go up.
You have a 400% loss.
Yes. You basically, you have both your longs and your shorts going down at expedited rates because of the margin that we've been talking about a lot.
What I think a lot of people fail to recognize too is in order to short a company, you need to buy what's called a put contract. If you're buying naked puts, your loss is unlimited.
Right. Yes.
Because if Salesforce goes from $100 a share to $1,000 a share,
yeah.
there's no stop to your loss. They can just keep going and keep going. And as long as you own that contract, you're going to continue to owe.
Yeah. So to put that in kind of like a very basic understanding, right? You have this put, you Colin.
Yes, me.
It's $100.
Yep.
Right. Salesforce goes to 1,000.
Yep.
I'm like, whoa, Colin can give me Salesforce for 100.
Right.
I'll take that. Thank you, Colin.
Yes.
And you're like, shit, I got to go buy Salesforce.
I got to go buy Salesforce at 100
at 1,000.
Well, $1,000 and give it to you at 100.
Yes.
So that's a $900 loss, and I can keep going.
Yes.
And there's no limit to that.
Yes. So the fact is, when you are in a market like this, yeah, you could absolutely pounce, make hay while the sun's shining and, ramp up your leverage and grow your $10 billion hedge fund to $45 billion like this guy did.
Yep.
Which is great
For
until
him.
it doesn't work.
Right.
And then you get blown up. Now, this is a 24-year-old, right?
He is not middle-aged.
He's not. He's what's that, quarter life crisis? He's not even at the quarter life crisis. That's
he
where
hasn't
he's at right now.
absorbed a lot of life experience yet. Yes.
So with a hedge fund, you usually have longs and shorts, but they're counterbalancing each other, to find some sort of happy medium that is a target return. Right?
100%. Yeah.
You don't usually have your shorts on the same side of the trade as your longs.
It's not for the faint of heart.
So this guy was not a trader, obviously.
No. Yeah.
But it wasn't necessary either. That's the thing, is that, like, why are we talked about
why are you playing both sides
Yeah.
of this and leveraging both sides?
and why do you have to chase that down? Because you mentioned that it feels like everybody just wants to fast forward and get to their final destination.
Yeah, 100%.
Right. That's what this guy was doing, when you could really put on your Hawaiian shirt and lay back and let the market do
Soak
it
in
for
the
you.
sun, in the words of Sheryl Crow. One thing that actually stuck out to me as you bring this up is I was actually pitched a hedge fund Friday. I won't name names. And the marketing material said we're up 37% year to date, was the marketing material.
Yeah.
I'm like, great. And then it showed last year they were up another like 30 or 40%.
Great.
Great.
Sounds great.
What happens when it goes down? And they're like, we don't have any testing for that.
We don't go down.
Yeah. I'm like, okay, sounds good. So like, I'm just going to rely on these gains
Yeah.
forever,
Yeah.
put my clients' money into it, and we're going to be good then. How do I get the money out? Oh, we've never actually had any redemptions.
Actually, we have a lockup. There's a gate that comes down.
Yeah,
So-
exactly. When you need the money, that's when you actually want to put more in. So I was like, yeah, I think I'm going to pass for now,
Yeah.
but thanks for reaching out.
Well, that strategy doesn't work if you take money out of it. You have to feed it. Otherwise,
exactly.
it would just eat
Yeah.
itself.
It's you
Yeah.
want to know what they call that as a virus. if
Don't
it
go viral.
only takes, you know.
All right. Where do you want to go from here?
I want to talk about Anthropic's AI hack, and I want to talk about the capture the flag exercise.
Such a crazy story.
I know. This
Okay.
blew my mind.
Go ahead. What
Okay.
happened?
So I did a bit of research on this, but long story short, there were big headlines about Anthropic hacking into companies on its own. It was
Yes.
essentially the way that it made it sound, which is partially true. But
It is true. It's 100% true.
Yeah. So what happened was there is an exercise that companies like OpenAI or whoever will do that's called a capture the flag exercise. So what it does is they close down a network and they have a bunch of mock companies and they say you have to go find this token within all the databases out there. And what it does is it tests the AI's ability to problem solve and hack into things. And it also helps with cybersecurity to see what it's capable of.
Right.
What happened was they didn't close the network.
Well, no. So they created the sandbox that you're referring
Yeah,
to.
there's the sandbox, and then they didn't fully close the back end.
Well,
for one of the tests,
there was one Ethernet that was you were allowed to go in for backup, basically
Right.
to like back up progress and feed it back in.
Yeah.
So it was
but it was able to get out.
yes. That's
But
the
it
scary
was
part.
able to get out, which was pretty crazy. So what happened was it got out of this sandbox, and then it was able to tap in to companies and then essentially find these tokens.
Yeah.
So long story short, essentially what it did is it actually hacked in to several legitimate companies, not companies within the sandbox. And it found publicly exposed systems and exploited some vulnerabilities like weak passwords, poorly secured services, and then access the systems while trying to complete its assigned objectives.
Yeah.
Which it did very effectively.
It cheated.
And it cheated, and the organizations were not intentionally targeted. So it wasn't like, Claude was targeting these companies maliciously, but
Right.
it was assigned a task and it hacked into these companies in order to achieve said task.
Right. So it said, here are the rules. They gave the rules of the game to
Mhm.
Anthropic.
Yep.
It's just called Claude because it's fun to what's that word? What's it called? You know what I'm
I
talking
don't
about?
even know what you're trying.
Oh.
It's like when you humanize something. Anyways, skip that. We're just
Try
going
to
to call it
humanize it.
Claude.
Yeah.
We're going to call it Claude. So Claude gets the rules of the game, decides that it's a zero-sum game, right?
Yep.
Win or lose. Claude's going to win because that's how you make daddy like you better.
Right, of
Right?
course.
I want to make you proud, daddy.
It's like a dog bringing a toy to its owner.
Right, exactly.
Look what I brought you.
So look what I bought you, except for this toy.
It was a dead animal.
It was like, hey, I found a better animal.
Yeah, exactly. Yeah.
But it broke out.
Yep.
It basically broke out of a sandbox. It got onto the internet when it wasn't supposed to be able to do that. That's scary as hell. Then it goes in and breaks into Hugging Face, some European company. And Hugging Face, no idea this is happening.
They were told after the incident had occurred.
Right. But they did see something kind of fishy happening, but they couldn't tell what was going on. And then when they worked with Claude to try to figure out what was happening, they couldn't get in because
blocked them out.
Right. Well, because of the European regulations on AI.
Yeah.
So they weren't able to, because of the regulations, they weren't able to use the tool that was hacking them to find out what was hacking them. And then Claude left breadcrumbs, basically like, hey, if I ever come back here again, here's what I'm going to do to break into this situation again. And it's freaking terrifying.
There's even more terrifying things than that. As I was digging even deeper into what happened, which was an even more advanced model of Anthropic actually created fake online identities, impersonated software contributors, socially engineered itself to be a real developer, and then negotiated code with real people to try to get into these companies.
Yeah.
So it basically convinced these people to merge malicious code into an open source GitHub project.
Okay. So I think what we want to be aware of here.
And it wasn't explicitly instructed to deceive anyone.
Right.
It just independently decided and concluded that was the best way to solve for the task.
Yeah.
Was that it needed human interaction. So it created its own persona to basically talk to people and import malicious code.
And you know what? If this was your child and your child was thinking outside the box and solving a problem in a way you couldn't even conceptualize, you'd be like, oh, wow, that's very creative. Don't do it.
But
again.
what is this child capable of?
Yes. Is this the Antichrist? But the malicious word is tricky because people will assign malicious intent to the AI, but the AI is it doesn't have that. It's not an actual human being. We can't give it human being characteristics.
It doesn't have feelings.
Yeah.
Yeah.
It's really just trying to solve the puzzle with all the skills available to it. And what's tricky is these skills are available to it.
Right.
And we're continuing to make it better. And there is kind of this.
And it's learning as it goes along.
But there is mutually assured destruction. It's like, there's a lot of AI companies that are out there saying, hey, we need regulation. But what that regulation does is it prevents their competition from coming into the space.
Yes, 100%.
Right?
Yeah.
But if they say we need regulation, this is really dangerous, but we're going to, we want to develop hand in hand with the government because otherwise China's going to beat us here. Right?
Yeah.
Or like there is this like race that we're in right now. It's a lot like the space race, but even more perhaps like the nuclear race.
It is. It's basically a Cold War. And this isn't just Anthropic. OpenAI actually found similar results with their own testing on their own models. Yeah. So it's not exactly as if it's just one, but as these things get smarter and smarter, it's going to present some interesting cybersecurity issues. Yeah. And what I should say is the attempt as it was kind of doing the hacking with the GitHub was detected and stopped before the malicious code was merged. But it was in the process of doing it before it was stopped.
That's the OpenAI. The thing is, though, they asked Sam Altman.
I saw this.
If this could happen again, he's like, yeah, I guess could happen again.
Definitely.
Okay,
in fact,
great.
Other things will happen that we don't even anticipate.
Oh my God.
Because it's a new thing.
Do you know Sam Altman, he doesn't have any OpenAI stock? Like he has no investment, no equity
No, I
in
didn't know that.
OpenAI. What he does do is
Leverage.
well, yes. He basically, what he says is that, being a part of history is meaningful enough. I don't need to own it. I'm
Wow.
here to see the world change.
How righteous.
What he really does is he makes sure that he benefits in the companies that benefit from OpenAI. So he
Right,
has
yeah.
investments in all these
Diversification.
Yes, exactly. Who knows what will happen with OpenAI, but all these other companies I've got
Yeah.
investments in.
Yeah.
Yeah.
So super fascinating story. I
Yeah.
doubt this is the last we're going to see of stories like this. The models weren't trying to attack companies for their own sake. It was a test that was run.
Yeah.
But it is scary to see what these things are capable of. And we're only a few years into this technology where it's really taken off.
It is a few years. It's funny how normalized.
We're
this is
basically still at flip phones.
Yeah.
It's pretty nuts when you think about it.
Yep.
Where do you want to go from here? Do you want
Charts.
to talk about the big ones?
I want to go to some charts.
Okay.
Can I share some charts with you?
Chart guy. Yeah.
So this is my new favorite chart.
Yeah,
I'm
I
gonna
know.
pull up the Palantir.
Okay. I got it.
Palantir. This is the Sankey chart, and this
Spell
comes
Sankey.
Sankey. I think Sankey.
Okay.
Pretty sure. And this is Dan. This is courtesy of our boy Dan, who's always feeding us interesting things. And he's still on X so that I don't have to be. But he gets these charts from the App Economy Insights. So this Palantir chart, what this does is after a quarterly earnings report, it will break in all the revenue, the sources of revenue. In Palantir's case is commercial and government, right? And then that goes in and gets split out into either profits or operating expenses, cost of revenue, etc. The Palantir, I'm bringing up Palantir because I've been reminding clients a lot over the last couple of weeks that just because there's a really well-run business doesn't mean the stock is going to demonstrate that through its performance.
Sure. Yeah.
Right.
I mean, performance is the buying and selling of the stock,
Right.
not necessarily the performance of the company.
Right. So Palantir has been having a pretty horrible year.
Yeah.
And they've been down, I think going down to year to date, Palantir was down 40% in July.
Yeah. Which is funny because it's been one of the best performing stocks if you go back 5 years.
Right.
But
yeah. And I've had clients like, hey, should we sell Palantir?
I had a client ask me that the other day too.
Right. And I'm like, no, because we're not
Still a
buying
good company.
and selling we're invested in the company. We're buying a company. We want to talk about what is a stock? Is a stock is an ownership of the company. Anyways, so this earnings comes out on, I guess it was yesterday, and the stock jumps up 30%.
Yep.
Right.
Huge jump.
These profits are insane.
I know, it's outrageous as you look at this. What this is, for anyone that's not watching on YouTube and is listening, is basically a visualization of a cash flow statement.
Yeah, which is really cool. I think the Palantir one's really interesting. I sent a couple others. SpaceX reported yesterday. Guess what? They're losing money. Shocker.
But not as much money as people thought.
Still a lot of money being lost
It
on,
is.
and the stock is down another 10% today.
Yeah.
It's basically been going straight down since the first gap up in the initial IPO week. And we're going to see, I think, a lot more pressure on SpaceX as these new shares come.
I was going to
available the
say, what
market.
is it, every month? 9?
Yeah.
What's the amount of shares?
It's a lot of shares.
Yeah.
It's going to be basically increasing the float, the amount of shares trading by 7%.
Yeah, each month.
Yeah.
Yeah. So basically, if people are trying to, the way to think about that is if you have an employee that has stock options, they're able to sell those stock options during certain points of the time during the month. And a lot of those shares are going to become available.
Yeah. So, I mean, SpaceX, if we look at the SpaceX chart, they've got space revenue, they've got connectivity, which is Starlink.
Yeah, which is doing really well.
Yes, Starlink is doing very well. And AI, and their AI arm
is killing it.
X is in there,
Yeah.
Grok, etc.
Do you know how much Anthropic pays SpaceX per month?
I do not know. Oh, it's $1 billion or something.
$1.2 billion.
Yeah.
It's absolutely insane per month.
Right.
And then Google pays them almost $1 billion as well, $920 million a month.
SpaceX thinks that at some point in the near future, Elon Musk thinks that the majority of the world's internet will be coming from Starlink.
I don't disagree with him, truth be told.
And it's also, he was talking a lot about vertical integration because when people want to launch their whatever the resources are,
They
the
have to do it
satellites
through,
up to they
either
use SpaceX.
SpaceX or
SpaceX is just launching. They're using their own equipment to get their own satellites up there,
yeah.
and that's really interesting.
I do think long term, like if you think about like a company's strategic position 10 to 20 years down the line from now, SpaceX is pretty ridiculous. Like to basically be able to corner the market on
There's no competition.
internet,
Yeah,
like
yeah. There's just like what Blue Origin is doing with rockets is basically just like one small piece.
yeah. I mean, they're trying to play
Yeah.
catch up, and
Yeah.
they're not even close. Like at this point in time, but to have a monopoly on connectivity
It's massive.
is unbelievable.
Yeah.
And then not only that, but your AI data centers. I can't remember what's the huge one that he's building out right now. It's like the I can't, Colossus.
Oh,
the
yeah,
name of it.
Colossus,
Yeah,
yeah,
Colossus.
yeah.
Yeah. Like so many companies are signing on for contracts with them now too. Obviously, I'm not recommending buying or selling a stock, but
Yeah.
in terms of a company, like it's pretty nuts.
Yeah.
The
Yeah.
fact that we have a company that is literally a publicly traded company, it's not even a government organization that sends rockets back and forth to space.
And they come back down
And they
get
come
caught.
back down, land, and then during that time period, they're launching satellites on their own for connectivity.
Yeah. The technological achievement is insane.
Yeah.
It really is.
Could you imagine no dead zones on the beach?
Someday, Colin.
Yeah.
All right. The last one I want to show you is the Amazon one,
Yeah.
because this does a better job of telling the story that I was trying to tell like a month or two ago when we were talking about the various different revenue sources. So Amazon has a significantly more diversified revenue stream, right? You've got the Amazon.com, the online store stuff that we talked about, the physical stores like Whole Foods, third-party selling services, advertising. But AWS is what we talked about recently. And if you look at all of these like the waves going of revenue. So they have $200 billion in revenue.
Yep.
AWS is only 42 billion of that. So let's call it 25%. But on the gross profit margin, if you go over to the right, you see that there's $105 billion. I'm using round numbers, $105 billion of the gross profit margin. After you break down operating expenses, you get to the $28 billion operating profit. Of that 28 billion, 17 is AWS.
Wow.
And all the others equals 11, let's call it.
Interesting.
Right? So
Yeah.
they are the workhorse. They are the primary source. Like,
well,
the
I think that's where we went wrong on that episode. Because I think we said revenue for AWS, but it was really the most profitable division.
Right. Yeah. So it's the most important in terms of the growth. Like the year over year growth is up 37% on AWS. There's nothing else even demonstrated. Like advertising is up 26%, I guess. But like AWS is growing the most for them. It's the most profitable and the most important. All the way over on the right, you have the net profit, and then net profits at 62 billion. You're factoring in some investments in some other companies here. And this is the cyclical stuff that we're talking about, because companies are paying Amazon to use AWS, and then Amazon is investing in Anthropic, who's paying Amazon to use AWS. Like it's
correct.
Yeah.
Yeah. I think what's unbelievable to me is the fact that there's this asterisk other. So operating profit is $27.5 billion, but their net profit is $62 billion. So $35 billion of their net profit just comes from investments.
Investments in Anthropic, basically.
Yes.
So that is where, like, okay, AI is definitely propping things up in the
But
market.
you want to know what's kind of crazy is like the SpaceX we just talked about, how much money they're receiving from Anthropic.
Yeah.
Amazon, how much money they're receiving in profit from their investments in Anthropic. Then you actually have Anthropic themselves, who's IPOing at some point, and so many other companies are investing in this. It's like
it's a lot.
It's a lot.
There's a lot on that leg of the stool.
Correct.
But because we have all the other sectors that are demonstrating
also doing
ROI,
really well.
That's really nice.
It is.
Can I show you one more thing that's not a stock chart?
Yep.
So this is Sankey. This is the X link that I sent. It's right above the SpaceX.
Got it.
So this is a financial planning Sankey. Sankey, my favorite thing now.
Is this for a client?
This is not our client.
Okay.
This is somebody who posted a sample illustration on X. And it shows $780,000 in salary, $50,000 in self-employment. But essentially what they're saying is there are a lot of people, you might call one percenters, who say, I make a lot of money, and I feel like I'm living paycheck to paycheck. Where does all the money go? And what this does is it, instead of using a company balance sheet, it creates a personal balance sheet and shows where all the money goes. It's still summarizing. Like you still have $180,000 in living expenses, $69,000 in housing. Like I don't know where like utilities fall, if that's under housing or living expenses, but whatever.
Regardless, it doesn't need to be itemized.
Right. I think categorically what it's showing is, here's everything you're doing. If you put $197,000 into planned savings because you're maxing out your 401ks, you're doing 529s, whatever, like if you're feeling like you don't have a lot of money, it's maybe because some of that is going to future you and not to near term you.
Yeah.
But I think that this is a really cool chart. Like if you were showing this to a client to help them understand.
This is legit.
Yeah.
Yeah. I think this is a great way to capture the year. I wonder if this is something that, well, I mean, we could, but I don't know if we could do it within our planning software.
No.
Long story short, though, I think this is one of the better visualization tools that I've seen in regards to planning, because I also like the color coordination, even coming from a colorblind guy. Because
Can
it
you
does,
see all the different colors?
I can.
That's great.
Well, there's 2 here, right? I'm just joking. But you can actually see the positives and negatives with this very easily. And this does break it down. What's crazy is obviously when you look at the expenses and tax payments, how much of a portion that makes up. But you have your goals here broken out, your planned savings broken out, your tax payments, expenses. And then at the very bottom, I'm surprised that unsaved cash flow isn't blue, personally. But long story short, this is a great tool, and I am excited to implement this because oftentimes our cash flow sheets are very confusing.
Yeah. I mean, we focus a lot on cash flow when it comes to financial planning. Like we try to, especially when we're looking out into the future.
Yeah, it's like
right?
mostly what we look at.
Yeah. It's like, let's make sure that you have enough money coming in to meet your cash flow need in the future. This is just, I think, a really good way to figure out, maybe this is better about the near term, like the snapshot moment in time, than figuring out what things will look like in your happy 60s.
Yeah, I mean, this isn't a projection, but I think it's a good visualization tool to be like, maybe this is an end of the year recap.
Yeah.
Which would be kind of cool, because then it would capture the full year. And you
Right.
could see, okay, well, here's this year compared to last year. And then if you captured enough of these things, it would show the changes, which would, I think, be very cool.
Yeah. Dan was actually saying that, going back to Palantir, he saw an overlaid Sankey that showed like the growth of these reports over time. So like overlay, like, so that would be really interesting to see like how things have changed over time.
Yeah, which would be really cool from a planning perspective.
Yeah.
We'll have to figure this out.
All right.
Great place to end.
Yeah. I do want to say one more thing. I was on a run through town this morning and I saw that there's a summer savings sale for GLP-1s. And I was like,
I'm sorry, what?
And
Buy one, get one free?
Part of the sign was covered. So then I like peeked around and it was like some religious organization. And I'm like, oh my God, we're mixing GLP-1s with, like, are there like street level GLP-1s that people are buying now?
One of those backdoor GLP-1 deals where you meet the guy behind the dumpster, you bring some cash with you.
Unregulated GLP-1.
Yeah. Have you seen, you don't watch South Park?
I see some South Park.
Have you seen the GLP-1 South Park episode?
Seen the GLP-1.
Oh my
of course
God,
there's the GLP-1.
it's so bad.
Yeah.
But the crux of it is, if you think about drug dealers in general, they're kind of like sketchy people is how you like envision a drug dealer. But this one, Mr. Marsh, Stan's dad, gets in with the hot moms who turn out to be the drug dealers of the GLP-1s.
Like pharmaceutical reps.
Exactly, pharmaceutical reps.
Okay.
And they're like the bad crowd, and it's all like these super rich women that are like having injection parties and things that are like goes on this whole path. But it is such a funny episode. Anyway, I'd encourage people to watch it if you're into that.
Yeah.
But
I appreciate your consistency. Like the number of times in the time that I've known you that you brought up South Park, it's very consistent.
It's very clever. It's a very clever show. It's inappropriate for sure, but it does have some funny, very relatable things. Yeah. Vacation next week.
It is summer. It is actually, no, I'm sorry.
Wheeler's vacation
August.
month.
It's August. It's the best time of the year.
Season.
Season.
August is the best season of the year.
The most wonderful time of the year. So in essence of August and relaxing, we're going to take a week off and not bring everybody the content they so desperately need. We're taking a week off.
We are.
In the meantime, that gives everybody the opportunity to catch up on our back catalog and all of the wonderful episodes that we've already released.
I think they're pretty good.
Oh, and we've got a points?
We do have a points one. We have a
points thing.
special coming out on
YouTube.
points on YouTube specifically.
Just on YouTube.
If you are looking on a how to book a vacation using points, check it out.
That'll be fun.
Because I found some pretty cool stuff for people who are interested in either going to Europe or Japan.
Any spoilers? Anything you can tell us at a time?
I think it's probably the single best hotel deal on points I've ever seen.
Ooh, okay. Now I'm coming in. All right. Like,
Thanks, everybody.
subscribe.
Share with a friend.
All right.
The information in this material is for general information only and is not intended to provide specific advice or recommendations for any individual. Investment advice offered through Integrated Partners, doing business as Ko-Fi Advisors LLC, a registered investment advisor. Integrated Partners does not provide legal, tax, mortgage advice or services. Please consult your legal tax advisor regarding your specific situation. Past performance is no guarantee of future results. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that the strategies promoted will be successful.
Compound Growth with Wheeler and Colin. Sponsored by Ko-Fi Advisors. Reach out today. Yay!